All right, well, I'll get the ball rolling. Hi everyone, and welcome to today's Business Performance Center webinar. My name is Kevin Velasquez, and I'm Senior Marketing Manager with NAIFA. If you didn't know, the Business Performance Center is one of NAIFA's 5 centers of excellence, with the BPC focused on giving advisors the tools and resources they need to help build and grow their practice. So if you want more content like today's webinar, such as articles, past webinars on demand, and more, visit bpc.naifa.org. A few housekeeping items for today. If you do have any questions for today's webinar, please feel free to ask them using the Q&A feature. Caleb and Harlan are, they want this to be an active discussion, so they're happy to feed off your questions and let those answers kind of guide how today will go. Today's presentation is also being recorded, and the link will be sent out to everyone in the coming days. So first of all, I'd like to thank our longtime NAIFA partner, Fairway Independent Mortgage Corporation, for bringing you today's webinar, the top 3 financial products to weather this financial storm. So to lead the discussion on this subject, we have Harlan Akala from Fairway joining us, as well as Caleb Williams of Better Wealth. So without further ado, I will turn the virtual floor over to Harlan and Caleb so they can tell you a bit more about who they are and what they do, and we can dive right in.
Thanks very much for the introduction. And we're thrilled to be here because, an old guy like me with gray hair, Caleb is obviously, I think about half my age, but less than half. But we've seen a lot of stuff over the years, my wife and I and our company, and I can tell you that never have there been a bigger need for professionals than right now. And so I can speak from many years of experience. Things were pretty rough back in the 70s and the 80s I bought my first house at 16%. So all the kids that are complaining about 6% interest rates, I have very little empathy for them. But the issue is that we're in a very tumultuous time. We have more people retiring than ever in history, 10,000 a day. This isn't the greatest generation. This is the baby boomers. And it's a problem because we have undersaved, and most of us are in a situation where we don't have enough money to last until we're 90, when many of us will live to be 90. And we're depending on the younger people to take care of us, who have an incredible amount of pressures and are now buying houses at 5, 6, 7%. So never has there been this much of a crisis, not to mention the turmoil and the unrest and the inflation and Russia, Ukraine, everything else. And in the midst of all of that, there are 3 financial products that the average people do not like. Those 3 products are reverse mortgages, annuities, and cash value life insurance. So if Caleb and I started a little seminar route, and we went to all of the big cities and started doing traveling, and we billed the seminar as the 3 most important financial products, and we listed reverse mortgages, annuities, and cash value life insurance, we would have very poor attendance because nobody wanted to hear about it. But if we went out and did a thing about how to make money with Bitcoin, or how to make money on buying hot stocks, the 10 hottest stocks to buy, everybody would just run in. And it's amazing to me that when something that happened just with the 20% drop in the market, that people are still largely ignoring and still saying, yeah, I don't need a reverse mortgage, and I hate annuities, and Fisher Investment says I hate annuities and you should too. And people say, no, I don't want to buy cash value life insurance because that's too expensive. That while all of that's going on, if we take a look at the whole life cycle, everything changes when we look at how those 3 products perform in retirement. Caleb, from your perspective, what are some of your comments and what you've seen, even though you don't have the whole history, you've read enough books and talked to enough older people, that you're probably seeing the same thing. Is that correct?
Yeah, and I first of all want to thank you for having me be a part of this. I'm bringing the age a little bit down, and I'm working on the beard to up my age so I can at least be half your age. So it's good to be here. And one of the things that we've seen, just as it relates to Better Wealth, because we talk to people all around the country, is we try to reverse the conversation from retirement to results. And that really helps people get clear on what they really, really want. And then it's as simple as, okay, what do you have, your assets, income? Like, what do you have a part of your chessboard, and how can we best help you get the results that you want? And so one of the things that we've done, and it's been a little change, but I think it's really helped, is we try to reframe retirement to future cash flow planning. And when we talk about future cash flow planning, then we ask the question, okay, if we're planning for future cash flow, what is the best way to do that? And that's really been resonating with a lot of people, because it's like we're just reframing what you truly want, and then we are actually being strategists, planners, whatever you want to call it, to help people get that. And so there's been a lot of fun epiphanies, but that's been one of them. And whether you're 25 years old or whether you're 65, 70, we've got to get really clear on what your results are, and then figure out what you have in your portfolio or available to you and how to help you with that.
Caleb, that's what I've always admired about you and I think this is what's created a lot of success for you despite having a young age, is you've always got this idea that I read a long time ago from the 7 Habits of Highly Effective People, that you begin with the end in mind, which, what do you want to, why do you want to buy this product? Why do you want to buy this car? Why do you want to buy this house? Why do you want to get married? Whatever. You begin with the end in mind, not just look at today. And so many people are looking for instant gratification in what's going on right now, instead of saying, well, just a second, what is the purpose of doing this? Why am I doing this? And then what is the desired result at the end? The issue that is surprising to me is how a lot of wise people and a lot of very knowledgeable and smart people, they're scientists, they're business owners, whatever, have made very poor decisions, because you and I get to see, as the people listening on the call, get to see all the time what the end result is. And it's like, why did they do that? In fact, most people, of course, spend more time planning for vacations, I guess the statistic is, than planning for their retirement or planning for their results in the future of their money scenario. So just today, this morning, I was talking to a couple in New York. They have 2 homes, one in the Hamptons and one in Garden City, New York, $5 million worth of real estate, 70s, and they are down to their last 1.6 million. And they need about $250,000 to $300,000 a year to live the way they want to live. And it's not extravagant. I mean, it's really expensive to live in New York. Plus, you lose about half your money in taxes when you take it out of your $1.6 million IRA. And they have a little bit of cash value life insurance, I think $200,000. And now they're in a situation where they're worried. They're worried, they're in good health. They're worried about whether or not they're going to be able to make it. And they are still making 3 mortgage payments at 75 years old. And have a very little amount of cash value life insurance and have mostly taxable money, which if they would have thought about it a long time ago, it wouldn't have made sense. Then I spent some time with a couple in Utah, and they're in their 80s, and they're no longer making a mortgage payment, but their stocks and bonds just went from over $1 million down to 800,000. And they are now canceling trips, changing their lifestyle, because they are worried about whether or not they're going to have enough money to make it to the end, because they're both in good health at 85 years old. What if they live to be 95, 100? And here they've got this big tax problem. They say, we don't want to even take out RMDs because we're paying taxes. And I asked them, what do you think is going to happen in the future with taxes? Do you think the taxes are going to go up or down?
Yeah.
And the lady said, is this a joke? Of course they're going to go up. And I said, then why are you waiting to pay your taxes? Let's do a Roth conversion to get rid of the taxes that are hanging over your head. So we talked to them about, both of these clients, about all 3 things: about the reverse mortgage, to having cash, tax-free cash available out of the house. We talked to them about their annuity and how that was tax treated, and how they could turn on more income so they didn't have to worry about what happened to the market. And we also talked to them about life insurance, which they can't qualify for that anymore. The other client who was thinking about taking the money out and actually killing their policy, the folks out in New York, realized that that would be a foolish thing to do. And instead, if they kept paying into their life insurance, that was going to take care of 100% of their legacy issues, 100% of their legacy issues, and do the reverse mortgage. And when they passed away, the life insurance would pay for everything that would be accrued on the reverse mortgage. It all fit together. Now, don't you find it surprising, Caleb, in both of these situations, just this morning, the New York folks and the Utah folks, the financial advisor, before I had talked to them, thought that reverse mortgages were bad. And when I was doing forward mortgages, before I started understanding life insurance, I told everybody to buy term and invest the difference. And cash value life insurance was a ripoff, and annuities are too expensive. Isn't it strange that people in the mortgage business are telling people that annuities and life insurance is bad, and then people in the insurance industry are telling people that reverse mortgages are bad? Why don't we get together?
I have no idea. It's a lot of times very elementary. We see this across the board, whether it's politics, whether it's belief systems. It's like this thing is bad, this thing is good. And I have to give a ton of credit to Dr. Wade Fall, who very much through many other people that have helped me kind of get this epiphany to being like, wait, like there's a world where we can come together. And I think Ernst & Young did a study that you all should Google, because it's very, very relevant to what we do day in and day out. And they essentially said via the study that life insurance and certain things like investments and other vehicles can actually enhance your income in the future. And that, like that epiphany, it's like, I don't know about you, but when I first got into this space, it was like very much I would learn from people in one camp that were saying, you know, life insurance is the only way, or annuities are the only way, and investments are bad. Now, it happened to sometimes be from the same people that were only life licensed and didn't do investments. And then you had, on the flip side, you had people that were just investments and life insurance is the worst, or annuities are the worst. But really, what do our clients care about? Do our clients actually care about where their money's at and what product they have? Or do they care about the result? Do they care about like the actual thing that's happening? And so when I think about reverse mortgages, yeah, talk about something that has had a bad rap for so it's like if you as an advisor even bring that up, you feel like you're like there's like going to be something wrong with you. But really, it's how you bring it up. Is once you get clear, like I wouldn't necessarily talk about any product for the first couple minutes or even in the first meeting. I'm getting super, super clear about where our clients are at and what they currently have and what they want to accomplish. And then when it comes to the result, when it comes to the strategy, when it comes to the plan, we have to do our very best bringing that together. And I think, quite frankly, there's just not a lot of great education. I think that's really the stem of a lot of the problems is I've been hearing from people all across the country. They actually reach out to us and they're like, hey, how do we learn about life insurance? Because the way that you guys talk about life insurance is really unique. And I'm just realizing that there's not a lot of people that are educating people. A lot of the people that are educating have an agenda, and that agenda is to sell a certain product. That's why NAIFA and organizations like this are so vital, because we need to elevate the mindset and help people understand that there's more than just a product. And that's where you come in. And that's where it's like, hey, if reverse mortgages can make your financial situation more efficient, you should do it. I don't care if you need the money or not. Shouldn't we be leaning into more efficiency? And Harlan, can I define efficiency for
that's what I was just going to say, that really for all of these things, every once in a while I will be with a bunch of life insurance folks and I'll say, how many people need life insurance? And they say, well, everybody does. Nobody needs life insurance. It's a want, and everybody should want it, in my opinion, but it's not a need. And people say the same thing about reverse mortgages, the same thing about annuities. I think I can get by without ever mortgaging my house. I'm pretty sure I have enough money in my 401k that I won't need to get an annuity. Nobody says, I think I've got enough money, so I'll never have to draw Social Security. I'm not going to draw Social Security. I'm just going to leave it. Even at 70 years old, I'm not going to take it because
it's a really good point. It's a really good point.
Nobody says that. They all take it. Even very wealthy people are taking Social Security. What it comes down to is stewardship that we talk about from a Christian perspective in Christian financial planning, which that's not what this is specifically about, but it's all about what we do with what we have and efficiency. So could you go into more detail? Because I think it is incredibly valuable, that mindset of efficiency.
Yeah. So efficiency has two parts to it. The first part is knowing what you want. There's a desired result to efficiency. So you need to know what you want. So that's step number one. And if we can't help our clients do that, it really doesn't matter what we do on the back end, because we're not helping them get clear on where they want to go. The second aspect of efficiency is removing any friction, barriers, any time, anything unnecessarily getting in their way to get that desired result. So step number one is get clear on where you want to go. Step number 2 is removing all friction to helping you get to that desired result. And isn't that like what we should be doing day in and day out for our clients? And so I use extreme examples sometimes of saying, okay, if I want to go to you in Minnesota, I could walk there. I'm really clear on where I want to go. I could walk there, or I could take a plane. Taking a plane is more efficient when it comes to money, time. It's less risk. Everything is better in that scenario of taking a plane. Do I need to take the plane? Going, no, I don't need to take the plane. But it's like, why would I walk or even drive to Minnesota when I could fly, especially when you're factoring in time? I look at our financial life the same way. It's like, if we get clear on where people want to go and we can be more efficient to do that, it doesn't matter whether you feel like you need it or not. And I think the Social Security example is perfect. I think people should write that down, because when people say, like, when people kind of give you those one-liners of like, I don't need life insurance or I don't need reverse mortgages, you're correct. We are trying to make your financial situation the most efficient, and then really helping your clients understand what efficiency means. I've had no one in 6 years of working with people tell me that they didn't want a more efficient way, especially when I broke that down. And so that's how we frame it, is we frame it through the lens of efficiency. By the way, I also want to say, if you guys have questions, comments, please use the Q&A function. Please use the chat, because very soon Harlan and I are going to do a Q&A. And if you have any questions about reverse mortgages, life insurance, annuities, how we frame certain things, we want this to be interactive, and we want this to be as valuable as possible. And so I just wanted to put that reminder for anyone. If you have any questions or thoughts, make sure to use a Q&A.
Yeah, thanks for mentioning that. Especially if you disagree with something, nothing wrong with saying, hey, I think you guys are, forgetting this, and I don't think you're, making comments on this. But it is amazing to me, the number of people, and the older I get, the more I know that it's important to listen. Whether it's listening to my wife, whether it's listening to employees, team members, coworkers that I work with. So I've been practicing listening when I get an Uber driver or I sit on an airplane, and I ask questions for as long as I can. And it is incredible how much I can learn about somebody in 10 minutes on an Uber ride, and certainly in an hour or two on an airplane. It's crazy. And people like to talk about themselves. And it's amazing how I was just flying into Minneapolis, the flight that I just got back on, and Jan gave me her card and said, I'm so thankful that I got to ride with you, because it's going to change my retirement. Maybe she was, when she found out that I sold reverse mortgages, she probably felt bad that she sat down next to me. But by the end of the conversation, she knew that I could help her with all kinds of things, not just with the reverse mortgage, because I could help her with her money decisions and being more efficient. What Caleb said is way more important. I think that a lot of us in the financial services business are busy doing our presentation, and instead of just being quiet and listening as to what do our clients need, want, what are they most interested in, what is their situation. Now, one of the things that I've explained to people for years, and this is in my book, is the 3 buckets. Everybody has 3 buckets of wealth. Bucket 1 is the client's bucket. That's their ability to make money, their ability to earn money from their business, from commissions, whatever. Bucket 2 is what everybody that's a financial advisor works in: 401k, stocks, bonds, annuities, life insurance, savings accounts, whatever, money that's not needed today, that's put away for the future. Bucket 3 is what the people at Fairway and I work in every day, is home equity. So everybody has seen an increase in their income over the last 10, 15, 20, 30 years. I remember when $30,000 a year was a lot of money for a household. Now it's not even poverty level, I don't think. And of course, nest eggs have went up. It used to be a big deal when my dad would talk about somebody, said, that guy is a millionaire. Now there's all kinds of millionaires. And how far does a million get you? Not nearly as far as it did back in the 70s or the 80s. Home equity. It wasn't, I bought my first house, it was $60,000. And that was a pretty nice 3-bedroom, 2-bath ranch. Now $60,000 doesn't even buy you a trailer house. So everything has went up, over the years. And we want that to go up because then we need it to go up for because of inflation, but we also need it so that we have a better retirement whenever we stop working or slow down in working or whatever. And as Caleb said, this is not about just retirement. It's about results. My retirement is very different because I plan on working for a long time. As long as my head still works, I enjoy what I'm doing. It's kind of my avocation at the same time as being an occupation. And so my retirement is very different in the way that I use it, but I still did a reverse mortgage, not because I need it. I can afford to make my house payment. I don't need to take any money out of my house, but I want to because it will help me with taxes. So let's take a look at the top. Everybody has three buckets of wealth. Bucket one, they shovel all kinds of money. People make millions of dollars over their lifetime. They put it into their nest egg in stocks, bonds, mutual funds, life insurance, annuities, etc. But they only save about 5-10% of their income usually at most. The average person saves below 5%. Wealthier people save 20% or more because they get more disposable income. But guess how much money people put into bucket three? Over 29% of their income goes into bucket three. That's an incredible amount of money. That's why there's $11 trillion sitting in bucket three, just people over 62. If you count everybody, it's 30 trillion. Largest asset class in the history of the world in one asset class. And people generally ignore it when it comes to post-retirement or past 62 years old when you can actually qualify for a reverse. So they start taking money out of Social Security. They maybe slow down, don't work as much. They take money out of their pension, whatever. And then they turn to you guys and start taking money out of their 401ks that they put together at work or whatever. And they very rarely come to us. In fact, almost half the people are still making a mortgage payment when they hit 62, which is dangerous. So a lot of things I don't agree with Dave Ramsey on. We won't get into all the details on that. But one thing, I disagree with most of what he says in regard to mortgages, 15-year mortgages. He hates reverse mortgages and so on. But the fact is, and Caleb just moved out to be his neighbor. I think they're, next door to each other in Brentwood, but so see what you can do to help him. But anyhow, the bottom line is I believe that you should not have a mortgage payment in retirement. You should not have a mortgage payment. In fact, after you hit 62, even if you're still working. I turned 62 on April 26th, and April 27th, I did my reverse mortgage and my mortgage payment went to zero. So I could put more money into bucket two because bucket two is more efficient than paying off a mortgage in bucket three. Has nothing to do with whether I need to get rid of my mortgage payment. So when you've got half the people in the country continuing to make mortgage payments, and then you've got somebody like I was talking to in Garden City, New York this morning, that is pulling out $5,000 a month out of bucket two and depositing it into his mortgage in bucket three when he's already got $4 million worth of equity, it makes zero sense. But people do that all the time because they think it's a good idea to pay off their house. In fact, in his 70s, he's got a 15-year mortgage and he's making extra payments on a 2.75% 15-year mortgage and pulling money out of his nest egg that just went down by $300,000. So in this situation, when you think about the value of using bucket two properly and the interrelationship with bucket three, that's where it's really crazy. Now, one of the things, Caleb, that people say is that, and by the way, Jennifer, a reverse does not affect government benefits because it's not considered income. So it's tax-free borrowed money. It is not income. It can affect Medicaid if somebody's broke. We'll go into a little bit more detail on that. They should still do a reverse mortgage, but they should take the money out differently. But all the money coming out of bucket three is tax-free.
And Jennifer, thank you for asking the first question. That's always the most daunting. So thank you.
We appreciate that, Jennifer. Let's get some more.
Well, you were going to say something, Harlan.
Yes. So what I was going to ask you, Caleb, is when you talk about everybody knows when you build a house, the first thing you have to do is do a foundation. Yep. I look at life insurance, my cash value life insurance, and my annuity payments that I'm going to receive in retirement, a foundation. It's not everything that I do, but it is a foundation of guaranteed money, safety that is going to be there no matter what, because my life insurance is permanent, guarantees a legacy, and also that annuity guarantees an income. When you talk about bucket two, the people that just do what you were talking about, where all annuities are too expensive and bad, and cash value life insurance, you don't need it after you are older. Can you talk a little bit about really what the annuities accomplish and life insurance? Because there's all kinds of people that say, I don't want an annuity, I don't want life insurance, but when they understand what it is, oh, I
Yeah.
want that.
Yeah.
So if you can kind of go into a little bit of detail on that.
Yeah, no, and I appreciate that. I think when we look at nest egg, again, the question is, what is the goal for saving and investing in the future? And so we kind of attract two type of clients. Some of our clients are entrepreneurial, so they don't even buy in to it. Like they don't love retirement already, and so they already get it. They're like, hey, we're gonna optimize for current and future cash flow, and we're gonna be saving our money and looking for that. When we're talking to someone who's maybe doesn't have that frame and they're just looking at retirement, and usually they're the ones that are telling us what their biggest pain points are. And I would love to hear in the comments like what some of your clients' biggest pain points are and some of what you're hearing, because we're just in the process of continuing to do market research. And I just always love to hear different thoughts. But our big thing again is we have a whole model. We use a cash flow ratio model that helps people optimize for cash flow. We show people cash flow today and in the future. And our whole deal, our whole strategy with a future nest egg is, how does this translate into cash flow? And we actually model that for clients. And there's not a lot of there's not endless or countless things that you can do. There's really 5 things that can shift your financial life. You can work longer, which majority of Americans will probably be forced to do whether they like it or not. I mean, Harlan, you're choosing to do it, but you don't have to. And that there's a big difference between that. A lot of people have to work longer because that's the only thing, that's the only lever near the end of their life that they think is available. The other areas you can make better investments, maybe make more money, maybe save more, or you can utilize certain strategies like annuities, like life insurance, or like reverse mortgages. And so one of the things that we share with our clients, and you alluded to this early on, is especially with life insurance, you save your money in life insurance. There's a lot of benefits that obviously can protect you. Obviously, your cash can grow depending on what kind of life insurance policy. It can grow the rest of your life, which is awesome. There's also living benefits. There's control benefits that a lot of our clients love. But what we also teach them is life insurance, especially, is very beneficial in your life today and in the future. But we also teach them how it can unlock or how it can enhance or optimize the future. And we do certain things like, if you have a life insurance policy that's not correlated to the stock market and the stock market drops, it will allow you to potentially be a volatility buffer to tap into that and wait till the stock market recovers. And just by that, studies will show that you can enhance your cash flow in the future. That's a strategy. Another strategy is utilizing certain pensions or annuities and saying, hey, is it possible if you had life insurance with a death benefit, a permanent death benefit, is it possible to be able to maybe take out more income, knowing that if and when something happens to you, you have a death benefit that can cover that asset, giving you more options for income? The same thing with reverse mortgages. What's one of the biggest stigmas of a reason why someone doesn't want to do a reverse mortgage? It's probably their belief on sticking their kids with not giving them the house. And you and I both have laughed about this multiple times. I don't want my parents' house, right? But that's a, don't tell them that, I guess. But it's if you could give your kids the option, here's a more efficient way to get money. If you want the house, you can have it. If you don't, here's money. And so when we share with people, life insurance is actually just unlocks your ability to do a reverse mortgage and not even feel bad about it. And that's just an example. Even if you didn't have life insurance, a reverse mortgage would make sense. Having life insurance makes it an absolute no-brainer. And so this is an example of how reverse mortgage and life insurance together, or an annuity and life insurance together, give you so many more options and create a more optimized strategy than just one or the other. Same thing with investing and life insurance, or investing in annuities. And so that's what we can do, because our clients are not hearing this. They're not being told this. It's very elementary. They're hearing commercials annuities are bad, reverse mortgages are bad, life insurance is bad, but they're not talking to people that can come together and say, how can we optimize this solution? And if you can show someone this is where you're currently at, and if you add certain things like this to your strategy, you can enhance your result. Not only are you going to serve people incredibly well, but you are going to have a ton of referrals because that's something tangible that people can feel.
You know, one of the best compliments I ever got, I was working with a financial advisor a number of years ago, and we helped a client with their life insurance, an annuity, and reverse mortgage, all three of these key products that make a big difference, especially now. And at the last meeting that we had with him, he said, one more thing, I want to buy life insurance on you guys. And I said, well, you can't really do that. Why would you want to buy life insurance on us? And I explained insurable interest to him. And he said, I've got an insurable interest in you guys. If you guys die, nobody else is giving me this information. So that was probably the best compliment I ever got, because he didn't look at me as somebody that was selling him something, or the advisor, somebody that was selling him. It was somebody that knew something that could make his life better in that situation. So that is so true, that this is not something that the holistic planning with investments, insurance products, and the housing, which is $11 trillion worth of wealth, is all meshed together. I can count on the fingers of one hand whenever I go into any financial planner group, how many of them are doing all three. Because I will ask, I was just with 300 attorneys and financial advisors in Fort Lauderdale last week at the National Association of Estate Planning Council and CPAs and everything else. I said, how many of you are actively using home equity in your planning? 2 hands went up.
No way. No way.
And
11 trillion. Are you?
Yeah, totally ignored. And so it's unbelievable. And you will be so far ahead, and you will be in a class by yourself if you incorporate home equity, insurance products, and investments all in one place. And you don't have to do all three of those things. In fact, you can't. You can't do a reverse mortgage unless you're licensed to do mortgages. I can't do life insurance. So, but if you work together with a team of people, maybe you're only doing insurance and you got somebody else that's doing the AUM, and then you are working together with one of our partners here at Fairway, you can dramatically change people's lives in a much bigger way than you ever imagined, because life insurance can give, my kids are going to get a life insurance check within a year after I die. I already know what they're going to get for an inheritance. They know what they're going to get for an inheritance. If there's money left in my house when I pass away, they're going to get that too, but they will sell my house. They don't like the green countertops in my house. They complain about it every time they come. They complain about it in Thanksgiving. It's like, hey, enjoy the turkey. Quit complaining about the green countertops. We like them. Yeah, Caleb and my kids are in a completely different idea as far as how to decorate the house. And so they don't want my house. Besides, which kid is going to get it? I have 4 sons. Which son's going to move in? So it doesn't make sense. But if I give them money, they can decide amongst themselves what to do about that. So when Jennifer had mentioned that the pain point I see is that I own my own home free and clear. How does this benefit me? I hear that. I've heard that, Jennifer, thousands of times. In fact, I was at a wedding a number of years ago, and somebody said, we were just talking at the wedding, and by the way, weddings are a great place to do prospecting, because you've got a captive audience for at least an hour when you're sitting there eating and listening to the speeches and everything. And a lot of times you can talk about what you do. And I don't actively try to do it, but invariably somebody says, so where do you live and what do you do? So I said that I did mortgages and specialized in reverse mortgages, and said, oh, well, we won't ever need you guys. Our house is paid off. It's free and clear. And she kind of stood up a little, sat up a little straight in her chair. And I said, oh, I'm sorry to hear that. And I say that all the time as kind of a joke. But they said, well, I bet you are. I bet you're sorry that you'll never make any money on us because our house is paid off. It's free and clear. We're done with you mortgage guys. I said, no, I'm sorry that you are living in a home that you have put hundreds of thousands of dollars into that you will never be able to use. You won't be able to use to take your grandkids on vacation. You won't be able to go on vacation. You won't be able to fix your roof. You won't be able to do anything with that money that's inside your house because you have put all of it in, and it's stuck there and you can do nothing with it. And then I talk about what the people at Money Tracks talk about: liquidity, use, and control, that you need luck in throughout your life. And your money needs to be liquid, usable, and you can control it. If you have all your money in your house, it's not liquid, it's not usable, and you have no control over it until you sell your house. And how much is your house worth when you sell it? Well, probably less this year than last year, maybe not. But regardless, I can't tell my kids how much my house is going to be worth when I die, but I can tell them exactly what the death benefit of my life insurance policy is, whether the market's up or down. So that takes care of my inheritance. So I can spend as much money as I want in the other places. It gives me a permission slip. My life insurance gives me a permission slip to spend my other money because the life insurance is taking care of my legacy. And you may say, well, yeah, but not everybody can afford life insurance. If everybody doesn't pay off their house, they can afford life insurance. I did a 30-year mortgage and refinanced from a 15 so that I could put more money into life insurance when I was in my 40s, when I learned that life insurance and reverse mortgages were not bad. So this is not just to talk to your old clients about that have gray hair like me. Talk to your 30 and 40-year-olds. Tell them not to pay off their house, especially if they have a 2.75% mortgage. Quit paying off your house. Don't put anything extra in there. Put it in bucket 2 so you get your life insurance and your annuities and your AUM taken care of. Yep. My net worth is higher because I never paid off my house and I put more money into bucket 2 from the time I learned this 20 years ago. Mm-hmm. You can tell your clients exactly the same thing, because one of the things that people might get sold in life insurance and they say can't afford it. It's because they're doing a 15-year mortgage. Yep. And that's something that was already mentioned by Paul Craig, who said a 15-year mortgage presents a higher debt to income ratio than a 30-year. Yeah, it's dangerous to have a 15-year mortgage when you might not be able to pay it when you lose your job or when you get older and you can't afford to make the mortgage payment. It actually hurts you. A reverse mortgage has a 0 payment, never affects anything on your debt to income ratio. So a dramatic difference. Mm-hmm. Any other points that you can make?
Two other things. I mean, and again, this could be a dangerous question, but I would imagine majority of people here are not pro pay off your house as fast as possible, or would not recommend a 15-year mortgage versus a 30. Why? Because you're putting your clients potentially cash flow risk. Yes, you're saving a little bit of interest, but you're not factoring in opportunity cost. And there's a lot more risk that can happen. Like if you are aggressively paying off your house and something happens to you, you get disabled, you get hurt. Like guess who doesn't like to lend you money when you don't have a job? The bank. And so even if people are so set on, I want to pay off my house, like that's their metric, which you and I would kind of die inside a little bit, I would still recommend a 30-year, save on the side to pay that off versus trying to speed that up. So if you're one of those people that say, yeah, I would not recommend our clients pay off their house aggressively because we understand opportunity costs. We understand that there's other financial investments and products that can give you more control, give you more growth, give you more options, give you more results. If you understand that same logic transfers over to reverse mortgage, like the same logic. So when we work with clients and we're taking a look at their financial life, if they're paying off their house fast or that they have a paid off house, we look at that and we see efficiency. There's potentially, this is not investment advice, by the way, there's potentially things that we can do to make them more efficient by potentially freeing up cash, freeing up capital to do other things with. The same thing happens now that you've been in our life, Harlan. If someone's over 62, we have our eyes open for all kinds of things, and it's like in our system. It's like when we get people's data, you're over 62 and you meet certain criteria, which you should definitely share with everyone, and they can write it down. It's an absolute no-brainer for, as we talk to our clients and we explain the concept, if they're at all interested, then we are very, very grateful for our partnership with Fairway. And you guys have such an incredible team. You didn't ask me to say this, but like the fact that you have people all over the country that know this and are advocates and not trying to take our business, but just enhancing what we're trying to do for our clients, it's incredible. And you've helped us help our clients, and we've made money indirectly because you freed up cash flow and capital for our clients so that we could better serve them. And so it's like everybody wins. And that's why this is so important, because I feel like if we understood this better, we could take just a sliver of that $11 trillion and make it more efficient. And that's really why we're doing this right now.
Well, and I have to admit that I failed miserably, because when I started in the business 20 years ago, there was $4 trillion in seniors equity. Today there's 11. So not enough people listen to me. And so we're trying to make sure that we get that out and to change the way retirement is done in this country, because now the baby boomers are hitting that point and it doesn't make sense for them to create more equity. In fact, the equity is increased largely because, of course, the values of houses increased, and inflation will continue to have that happen. So that is the case, that when Caleb said everybody wins, when I went to a 30-year mortgage instead of a 15, my financial advisor got more money, because I always tell people that the more money that you put into bucket 3, the less money you have to put into bucket 2. So the more money that people give us of their cash flow, 25, 30, 40% of their income, the less money they can give to you to ensure their future. They can't buy annuities. They can't buy life insurance. They can't put their investments into a 401k because they're giving us too much money of their cash flow. And then people say, well, yeah, but if they pay it off, then they'll have a whole lot more cash flow in the future. Math doesn't work out that way. The earlier you start investing, the better off you are. So if you take a 15-year mortgage, you pay it off, and then you start investing, you can never catch up with a person who did a 30-year mortgage and invested the difference. I've looked at the math hundreds of times. It's an impossibility. So the earlier you start investing, pay the least amount you can on your mortgage and pay the most amount that you can for your future, you will come out in a better position at the end. Again, coming down to results. That's math. So when you think about that situation, that if I have life insurance to take care of my legacy, and I have a cash available if I need it, and the life insurance will also take care of it if I die prematurely, and my wife will be okay. And number 2, if I have purchased annuities, that gives me a foundation of income. And number 3, my mortgage payment goes away, and I now have access to the money in my house, which could be half of my wealth with the way real estate has went. I'm in a way better position than people that put all of their money into stocks and bonds and IRAs and are not taking it out and paying a significant amount of taxes. Let's not forget that life insurance borrowing and reverse mortgage borrowing is tax-free. If you understand life insurance, you will understand reverse mortgage. You put money into life insurance, you can borrow from it, you can take it out, it protects you. And also, if you put money into your house, you can take it out and use it and still keep your house, still keep your death benefit in the life insurance scenario as well. Now, one of the questions that came up, and this is my biggest concern, Martha had mentioned the biggest pain point right now seems to be long-term care costs. If you're not talking to your client about long-term care costs, you are not doing your job. Mm-hmm. My parents my mom had Alzheimer's, dad had a stroke. And it was the roughest 2 years of my life. And they had a son, their youngest son, who told them that they didn't need long-term care insurance because he would take care of them. That stupid son was myself. That's really dumb. Because guess what happened when mom and dad had needed long-term care? I've got 4 kids under the age of 10, and I'm extremely busy with my career and my kids and our family. I don't have the ability to take care of mom and dad, even if I wanted to. That was ridiculous to think that. So fortunately, we had the reverse mortgage to use that money in their little farmhouse in Wisconsin to pay for their long-term care, to pay for home care so they could stay at home for a longer period of time. But if that's not factored in, when you've got memory care running $10,000 to $15,000 a month and people living longer and the dementia wave happening, it is foolish not to factor in that single biggest risk. People that would never even think of letting insurance lapse on their $30,000 car will not buy long-term care to protect $1 million asset or more. Yeah. Caleb, what are some of your comments in regard to long-term care, which can be factored into the annuity issue and as well the life insurance issue on long-term care and standalone?
Yeah, I'll be the first to say that I'm not an expert here. I think it's very important to planning, and I think it needs to be factored into someone's overall model. Like we said, we try to model people's financial lives, and the model needs to be able to tell the whole story. And so, what does happen when future long-term care events happen? Like, how are those assets going to get spent down? And to be able to actually show people that is really key. And so, that's what I'll say is that's a huge pain point, something that people are not having conversations about. And again, it goes back to efficiency. we can be more efficient, that needs to factor in for all kinds of things like risk.
Yeah, and you know what's amazing to me is that the number of people that don't even broach that subject, it's a very real issue. I mean, I don't want to be a burden to my kids. I don't want to be a burden to my my wife. And so we have sufficient long-term care coverage. And whether you do it as part of an annuity benefit, whether you do it as the long-term care with or the living benefits with life insurance, I'm not an expert on that either. You want to make sure you're working with a long-term care expert. At Fairway, we work a lot with Buddy INS. Some of you are familiar with that you don't need to have it's not a competing company. You can just work with them directly and even share in the income. If you want more information on that, we can give that to you. But whatever, you need to work with somebody that's an expert in long-term care. I'm not an expert on that. Caleb's not an expert, but you need to talk to somebody who is, so that that's part of your plan. But I know that my kids are not going to have to worry from a financial standpoint if I have to do that. And you know, the number of people that say, I'm just going to spend all my money and let the government pay for it. Before you ever say that again, I want you to go visit a government nursing home and say, is this where I want to spend the last 2 years of my life? I mean, the number of people that want to do that after they're in the government nursing home, I know there's some good ones, but the vast majority of people, I've been to one where there's 4 beds in one room and people are yelling to ask some help because they're understaffed. That's not exactly the most exciting career. Do you hear a lot of people say, I want to work in a long-term care home when I grow up? That's not exactly a career. It's very difficult to hire people to do that. The people that do that are very special people, and there's not that many of them. Right. And so be careful about ever considering that, but that is an incredibly important issue in the overall equation.
Ted asked a good question. He said, isn't a big part of the problem the fact that people, too many folks are buying / owning way too much house? In other words, like maybe overpaying for a house?
Mm-hmm. So that's a great question, Ted. And if you want to pay your house off, you've got to be very careful about what you're going to spend on the house. Now, in my situation, I bought a more expensive house and a larger house because I have 4 sons in Minneapolis and 4 daughter-in-laws and 5 grandkids, and they were all over here for Thanksgiving along with a few other people. And we had 30 people in the house. That won't work in a little bitty house. So part of my retirement, part of my 4th quarter of life is that I have a very nice house in a nice area that's relatively big, but I only had to pay half price for it because I've got a reverse mortgage and I don't have to make any mortgage payments on it. So it's how you use it. In fact, I would argue that I told my son, buy a more expensive house as a starter house. He thinks I'm a genius now because he did it when rates were 2.75%. But I said, buy a little bigger house, and then that will go up more in value than buying a cheap fixer-upper house, depending upon how much work you're going to do yourself. So one way of building wealth is buying real estate. And one of those pieces of real estate is your house. So it is true that if you live in a yurt or you live in a tiny house, that you will spend less money on housing. But is that where you want to live? That's really part of it. In fact, you can be homeless. You can get a tent and live in the warmer parts of the country. You can get a trailer house in a trailer park. Is that where you want to live? I'm not making fun of that. If that's where you want to live, that's okay. But one of my goals in the last quarter of my life is to have the nicest house. Not the house that is something I have to settle for at this stage of my life. When I was standing back in Thanksgiving and watching the 30 people in our house enjoying things and eating turkey and everything else and just having a great time as we said the prayer at noon, tears came to my eyes. I mean, this is what I wanted, surrounded by family at 62 years old. Who's luckier than I am? I mean, and they're in my house, our house, and it's really a neat situation. So that's I would never judge anybody on. Some people want less, they want to give more away, and they want more. We've just decided that one of the things that we want is a larger house, and the kids always talk about, hey, we've got great memories at the Shannon house. That's our address. We got great memories. Let's all meet at the Shannon house this weekend. So it depends on what you want. And again, it comes back to what Caleb's talking about. Where are you going? If that's the direction that you're going and that's what you want in the 4th quarter of your life, then that's the direction that you're going to go.
And I'll share our buying framework, and it's a function of 2 things. Question number 1 is, should you buy that house? Should you buy that car? Should you buy that fill in the blank? And that we really need to, we might have to look at the question, can we afford it? We might need to look at from a cash flow perspective. We might look at values. There's certain people on the flip side to say, I don't value a big house. I value a smaller so that I can travel and be. So it's like there's no right or wrong, but you really have to figure out question number one. And then question number two is what is the most efficient way to make that purchase? And the cool thing about the house conversation is you can see the house. Like it's unfortunate that the house is a lot of times the greatest asset that people have outside of their ability to make income. And we knowing certain things like reverse mortgages or like a 30-year could be the solution to being the most efficient way to make that purchase. The problem with many people, including Dave Ramsey, is they're marrying both of those together. They're saying like, so it's like question number one is, should you buy that? Question number two is the most efficient way to do that. And so to kind of go up based on what you're saying, I agree. So many people are making purchases that probably are not wise. And as a result, Harlan and I are not going on the record saying that the 30-year mortgage is going to be the best decision for them, or reverse, like it might be the most efficient decision for question number two, but the question number one is they bought too big of a house. So I think it's that. I mean, that's how we help the people that we serve really take like step number one, step number two, and that's kind of how we separate that. And so I hope that helps.
No, that's important. Financial planning is one person told me once, financial planning is simple. Either you spend less than you make or you make more than you spend. And so in reality, it's there are people that buy too much house, and I counsel all of my kids what they should plan on, and not to buy the fanciest and the most expensive and buy a used car and all that sort of thing. Now, some new cars are a better deal than used cars, but depending upon the time period, I told many people, do not be a slave to your home, because you're not going to enjoy your home. If it becomes a burden, you should not buy that house. Same thing with a car. I had two people that came in a number of years ago when I was doing forward mortgages, and they both had fancy pickup trucks, both of them, expensive pickup trucks, and the two payments were almost $700 a piece.
Yep.
And they came in and they wanted to buy a house. And I said, you're going to have to sleep in your trucks, because you already used up your debt ratio on your trucks. So you made the choice to buy two trucks instead of buying, and nothing against trucks. A lot of people like them, but they couldn't buy a house because they were spending too much of their money on the other side of the equation.
Yep. So Harlan, can I ask you a question?
Please.
What is the best way for people to be like, okay, how do I work with you guys? It's like, I might have a client that this might make sense. What is the actual process of how we can best, incorporate you guys into our planning?
Well, thanks for that. I should have mentioned that a little bit earlier, actually, but here's the deal. Do not talk to your client about a reverse mortgage. I was like, Harlan, you spent the last hour telling us how these things are great, and now you're telling us not to talk about them. I guarantee you, that's what I used to do. I talked to financial advisors, insurance agents. NAFA in Wisconsin is where I started, and they get all excited about it, and they'd go talk to a client, and they say, man, this client was mad when I brought it up. I'm not going to talk about those ever again. He said he'd drop me as an advisor if I ever brought the two words up again. Nobody wants a reverse mortgage. I don't want a reverse mortgage, but I want what it does. And you can say the same thing about life insurance. Nobody wants life insurance, but you want what it does. So what you need to understand is that every person over 62 years old should look at a reverse mortgage. Doesn't mean that everybody should get one, but everyone that reaches 62, just like when you reach 62, you should look at when you're going to draw Social Security, because that's part of your planning. So the issue is the way that you want to do it is a reverse mortgage allows you to have access to about 40 to 60% of the value of your house, and you never have to pay it back until you're 150 years old. The interest accrues, and when you pass away, the kids get the house and pay us off, and whatever's left obviously goes to the children. Very simple scenario. Just like you put money into a 401k, you take money out of a 401k. You put money into a life insurance policy, you take money out. You put money into an annuity, you take money out. All a reverse mortgage does is allow you to take money out that you've already put into your house. So to prove this to yourself, we could talk about all kinds of scenarios. And just like life insurance, just like annuities, it's different for every person. You can't say everybody should buy this type of insurance, because that would be wrong. Everybody should get this annuity. This is the best deal in the annuity world. Nobody would say that. It's the same scenario with a reverse mortgage. So give us an email at reverseevents@fairwaymc.com and say, approve it to me. I've got a client that has their house paid off. I've got a client that doesn't have their house paid off. I've got a client who's 62 and 72. What would we do with them? I've got a client that wants to buy a house in retirement. How would that work, buying a house with a reverse mortgage? And make sure you talk to us in detail. We'll pair you with someone that is in your area. And I'll be involved in some of those. I was just involved in 3 of them today, and a little more complicated case studies. And we will talk together and say, okay, like for example, this client that I just finished with, we can help them with their giving. We can help them with their income. We can help them with an early inheritance. We can help them with a Roth conversion, and we can help them with long-term care because they don't have a policy and can't qualify. Was the solution for them. But we talked about that for an hour before we ever talked to the client, because we weren't going to talk to the client unless we had solutions for them. And that is the way that it must be done. If you try to do it any other way, it's no different than if you talk to somebody in the airplane and say, I think you should get a life insurance policy. What are they going to say? No, I don't want one. I don't need one. I think you should buy an annuity. No, that's the same thing with reverse mortgages. You do not do it in that situation. So make sure we have case studies, and just send an email to reverseevents@fairwaymc.com and say, hey, I want to know how this would help Bill and Sue. You will learn it incredibly fast if you just take a look at what is the application for Bill and Sue. What's the application for Joe and Sally? How does this work for Joe and Sally? I don't believe it can help them, but let's give it a try. And that's where you will learn it the fastest. It's no different than riding a bike. You could go to 40 hours of classroom and you wouldn't know how to ride a bike. You got to get on the bike and start riding it. And that's what you need to do. And then we look at it holistically, because guess what the questions are that I ask all of the clients that I talked to today. What do you have in bucket 2? What do you have for life insurance? What do you have for long-term care insurance? Do you have an annuity? Have you drawn Social Security yet? I'm going to ask them all those questions, because otherwise I can't give them the right information. And all of those questions were asked to be able to see if it fit in with everything else of the advisor before we ever schedule the meeting with the client. It's critical that it's done that way, because then we're after what? Results, not after selling a product.
And what are some of the qualifications, Harlan, for like people, like if someone's looking at a fact finder, what are like clearly like on why they should email you? Like, is there any like, if your clients are in this situation, you should 100% give us a shot?
Yeah, if a client is over 62 and they have 50% equity or more, they've got their house paid off, there are things that can be done. Like this client had their house paid off. The Roth conversion is perfect for them. They're going to save a bunch of money with the Roth conversion. The client before that, they're still making a mortgage payment. It makes perfect sense to eliminate the mortgage payment and pull less money out of their investments. Everybody has a different use, and invariably it results in sales for you, because now you can help them with other things. That's not why we do it, but that's just what happens, because when we redirect the money that's going, this client out in New York had $5,000 a month going into his house. It makes more sense not to take that out of the investments or to put more into bucket 2 instead of the other way around. It helps the advisor, it helps us, but most of all, it changes the life of the client for the better. And when we can prove that we can put the client into a better situation, that's when it makes a dramatic difference. And by the way, if you want a copy of my book, let us know. In fact, if you want a copy of Caleb's book, The And Asset, we have a bunch of them, and we'll get you either Caleb's book or my book or both. and make sure that you know how this works, because it's a pretty cool scenario. And we're winding down to the last minute, but Caleb, could you tell us a little bit about Better Wealth and Better Wealth and Fair Way of work together on a lot of things? I just talked to a client right before I got in this call that is being coached at Better Wealth. Tell us a little bit about that.
Betterwealth.com, we specifically work with entrepreneurs and try to help them live a more intentional life. And our idea of wealth is living intentionally. And so we're very much trying to change the conversation of like, what is wealth? What are the goals? It's intentional living, trying to help our clients really get clear on what does an intentional life look like, and then reverse engineering that and say, how can you use your time? How can you use your relationships? How can you use your talents? How can you use your money? i.e., money is one of 4 areas that we look at, and how do we help you be more intentional? And so it's interesting having Better Wealth being our name. And a lot of times people think all money, but really we're improving our clients' lives by really challenging them on who they are and how they live and how they think. And that has a lot to do with what we do on the money side. And so, anything that I can do, my email is caleb@betterwealth.com. And I can put that in the chat as well. But if there's anything that I personally can do for anybody on here, please let me know. And I'm here, just like Harlan. We're here to serve. We're here to try to encourage and help as many people raise the bar so that we can serve our clients in a more effective way.
Hopefully this raised more questions than what it answered, but I will tell you, I'm going to make a very bold statement, and it is backed up by Jamie Hopkins, who's an attorney and a longtime NAIFA speaker and so on. Jamie said it is in a previous NAIFA recording, it is really impossible to be a fiduciary and not talk about housing wealth. If you're not talking about life insurance, annuities, and assets under management and reverse mortgages, and putting all of those things together in a holistic plan, are you really serving your clients the way they should be? I would argue that you cannot, because I've been doing this for 20 years, and financial advisors that try to ignore bucket 3 are simply not going to be able to serve as well. So make sure that as you have questions, there's several questions about costs and so on that varies depending upon the area of the country and depending upon the values of houses and so on and so forth. But we will explain that. Just take a client, don't talk to them, don't give us any personal information. Let's just run through and say, this is how we put it together. Because I will tell you this, the future of this country depends on how much the mortgage industry and the financial industry works together. And if we don't work together, I would say we're all guilty of malpractice, because we can do things that you can't do and you can do things that we can't do. When we work together, the outcome will be better. If you had a heart surgeon and there was something wrong with your GI tract, there's a good chance that the heart surgeon is not going to do a great job, even though he's a doctor. And there is no question that we have to work together. And I'm just privileged to be able to work with Caleb, learned a ton of things from Caleb. And hopefully I've shared a little bit that's helped him in his business as well. We are thrilled with the opportunity to work together with you folks and make a difference with NAIFA. And it looks like we might have come up to the top of the hour.
Yeah, right on time. But thank you so much, Harlan and Caleb, for the very engaging discussion. I hope everyone out there thought it was interesting as well. We got a lot of good info out of it. As I mentioned at the beginning, this presentation is being recorded, so we will send that out in the coming days to all of you guys. So I hope you enjoyed it. If you had any lasting questions, be sure to shoot Harlan or Caleb an email. I believe they dropped it in the chat. And yeah, I hope everyone has a great day. And that concludes today's webinar.
Thank you very much.
Thank you so much.
Thank you, Caleb.